Hello everyone, this is Ming Jong. Welcome to another episode of the daily market analysis for the S&P 500 in minutes futures for the session of 6th of October. So in this video, I'm going to share with you the market recap from the last session and also my trade review in a 3 minutes time frame, which I will include the entry, the exit, and also the rationale behind. And in the trade review section, I will explain in detail how I actually trade the breakout and also one simple trick that I use to increase my winning rate and also avoid a lot of the false breakout. And going forward, I will definitely cover my bias for the S&P 500 markets and also my trading plan for the session later. So you'll be knowing the levels that I'm watching and also possible trade setup as well. Okay. So let's just get started. So you can see that in this daily chart for the S&P 500, yesterday we have another bullish day. So pretty much just have a breakout, but the volume is relatively low, has been decreasing. But the most important thing is first to look at the result. And let me just dive in straight to the hourly time frame and let's see if we can extract a lot more detail from the hourly time frame. So we can see that in this hourly time frame, one thing that stands out from here definitely is the relatively low volume session, and possibly because of the previous session on last Friday, we have seen quite a lot of the panic selling together with some lot of the buying of the bottom as well. And just before the US opening session, I think that's around 9:30 p.m., which could correspond to this bar. So prior to that, we have a gap up in the Asian session. So Asian session, we have seen a gap up, and subsequently it just have a little bit of the upside, and actually followed by a relatively shallow type of the reaction, which actually tested the gap. So the gap has been filled, and subsequently you can see that right after that we just have another small movement up, and all pending this US opening session. And right after the session, we have seen the breakout and followed by marking up and consolidation, and eventually have a bit of the inch up as well. So one thing that is very important and I think is quite worth to watch is that we just had a breakout from the 3380 immediate resistance level, and so far the price action has been performing relatively well and is holding up again. While we do have a bit of the shallow type of the reaction, tested the resistance level, but that's still evolving and we're still not sure whether it will just reverse from here on. But anyway, I will just elaborate a bit more in the later part of the video when I talk about the current market condition. So let me just dive straight into the 3 minutes time frame and let me explain more in detail on how I actually trade the breakout. And it's a relatively simple and straightforward type of the trade, and especially when I implement this little trick. If you have been following my videos, you've probably seen me talking about the trick before. But anyway, I'm sure you might get something out from this trade review as well, because the perspective or the context is always different, and I think it's just a lot of fun while we trade. So let me just talk about the context. We have this rally, here's the gap in the Asian session, and subsequently just going through this kind of the consolidation. You might just recognize it as maybe a rounding bottom or some kind of the cup and handle. So no matter how you want to interpret the pattern, to me, I always just treat it as some kind of the structure. So it might be just a horizontal type or might be a rounding bottom. It doesn't really matter. So what really matters is the context. So we have a uptrend and then subsequently followed by this kind of the range. So here's a range that I'm talking about. So it's kind of like a big trading range here. And eventually what I intend to do is, based on this range, I would like to trade some kind of the breakout. And another thing that stands out to me is the resistance level. So 3360 is a immediate resistance level. If we just take a zoom out view in the hourly time frame, you can see that the 3360 is kind of a important level that first formed right at the buying climax high here. So that is the structure and in the hourly time frame. So I think that 3360 level is also a level that's worth watching. So I just talk about this, maybe it's a rounding bottom type pattern. But anyway, that's the whole context. And let me just get back to the 3 minutes time frame. And when I trade the breakout, I always would like to avoid the initial break or the first break. So why is that? Let me just zoom in a bit more and you can see that in action. Okay, so we have this resistance level around 3367. So the breakout, the first breakout actually happened at the opening bar. So here's the 9:30 p.m. my time zone, correspond to about 9:30 a.m. in the New York time as well. So this is the first breakout, and in the first breakout, it tends to attract a lot of the supply because this is the first time you actually initiate a breakout. So a lot of the traders would like to fade the trade or to bet on a uptrust, false breakout, would just jump in and short the trade. And also some people might just would like to have some kind of the reverse mean reversion trade. So you might think that, oh, okay, we might still need to consolidate for some more time within this range, so they will just short the trade as well. So in the first breakout, usually that will attract quite a lot of the supply. So in this case, I always would like to monitor how you actually respond the breakout. So this trick alone, or this technique alone, actually just help me to filter a lot of the bad trade, because a lot of the time, not sure whether it happens to you, but it certainly happens to quite a lot of the trader as well. So a lot of people would like to trade the first breakout. So we say, okay, it's a range, and they just say, okay, there's a big bullish bar and it's breaking out and it's close above the resistance level, so let's just jump in. But most of the time, and what they actually get is actually a uptrust or the false breakout. So in this case, they will just get stop out when the price retraces back, if they put their stop just right below the candle. So that actually happened quite a lot of times. It happened to me and it happened to some other traders as well. So in this case, we can see that when it first break out, definitely it's the first breakout and also is the first opening bar. So the opening bar actually is quite volatile, and a lot of times that I don't really want to trade the opening bar as well. So I just wait and see how the price actually responds to the breakout. So you can see that the second bar actually have a bit of the pullback. So here's a reaction, and here comes another attempt to break out of this high. So we can see that the rejection actually comes right here. Let me zoom in a bit so you can see the volume as well. So the volume also plays a key role when we access the whole context or whole scenario. So here's the first breakout, and we have a test, and here's a subsequent attempt to break out and then actually attract a bit of the supply. So we have seen the increasing of the supply together with the rejection tail and followed by this reaction. So the supply level is generally high, but look at what's the results here. It barely commit below half of this opening bar. So I think this is a relatively constructive sign for the bullish scenario. So what I intend to do is to stick to my trading plan to trade the breakout. So my actual trade was actually right after the close of this bullish bar. So you can see that I didn't trade this second breakout as well. I just waited and wait for the third breakout happen. So here comes the third breakout, and this times I just enter right after the close of this candle, because this is a first breakout and subsequently the test, and actually not too bad. But the second breakout actually kind of failed and have the deeper reaction, but the reaction is generally constructive, and so I just want to trade the third breakout, and as long as it can commit above and stay above this high here, then I just enter the trade. So you can see that it's pretty straightforward. So avoid the first breakout. So the second breakout, because it didn't really commit above, look at the rejection tail and also the close, so just avoid that, and subsequently just wait for this third breakout. So as long as it's commit above, then here we go, here's the trade, and I just trail the stop, and actually there isn't much upside for me to trail. You can see that my stop actually hits. Actually, I think I manually exited this trade. There's one thing that I'd like to show you how I manage this trade. It's a relatively short duration trade. You can see that roughly around 10:30 p.m. So it's about half an hour, just a few bars here. When I trail the stop, I just trailed it obviously somewhere below the immediate swing low, and subsequently this 2-bar catch my attention because we can see that the volume just pick up a bit more, and this is fine because that's considered as another breakout trade out from this little trading range. And the next bar here actually just make me a bit of worry because the similar effort to push up the price, yet what we have is kind of a shooting star, or simply just see this kind of the small spread candle and also the rejection tail on the top. So effort versus results based on the Wyckoff law, and I think that there is definitely presence of supply on this bar alone. So in this case, I just close my trade immediately after the close of this bar and without any confirmation. So usually I will just tend to wait for the confirmation, like for example another big bearish bar for a reversal bar, but in this case I just close it because I just feel a bit sleepy at that time, and so don't want to carry on and watching the market, so I just exited my trade. So you can see that it's kind of a early exit because subsequently there is no confirmation. So we have this little bearish bar and then followed by some kind of the upsloping trading range, and eventually have another breakout as well. But eventually it just kind of lose the momentum to the upside and entering into the trading range. So I think my exit here wasn't too bad, although I think if I just stay up a bit more, then I can maybe squeeze a few more points to catch this candle as well. But anyway, this is how I actually manage the trade. So to recap, I think it's very straightforward to just avoid the first breakout because simply it attracts a lot of the supply, and we wait for the reaction to see how the reaction unfold, and then we wait for the commitment to trade it when it actually closes above the high. Alright, so let me just get back down to the hourly time frame and let's talk about the current market condition. Okay, so far we haven't really seen any kind of the threatening action. For yesterday, price action definitely is bullish. Not much threatening price action, especially when we have this kind of very simple breakout, consolidation, and then continuation to the upside as well. So currently, during the Asian throughout the London European session, it's kind of in a tight range. You can see that we are just within this tight range here. So we have a bit of the breakdown, but did not really commit below or have the downside follow through. But should we have a deeper reaction or deeper correction, in this case, the first level of support that I am watching is definitely somewhere around here. I think that could be around 33.75, 76, and then all the way to probably 33.66. So just based on this little structure alone, so that could form some kind of the long trade if you can just retrace a bit deeper and then touch that and have some kind of the reversal. Then I think it could become my long entry. So let's just see how it can unfold. And if we can just continue to go up, I think there is a high chance that we're going to see S&P 500 to test the next level of support, which I mentioned last week already. So 34.20 to 34.50 is the next level of the resistance. We just need to see how it actually reacted from this resistance zone. So far everything looks quite bullish, and we do not see increasing of the supply based on some COVID news or election news. But anyway, in terms of the structure, I briefly mentioned that we just breaking out from this trading range here. So based on this trading range alone, I think so far it can just provide some support as well. So just watch the level somewhere around 33.65 or 60 to around 33.70. So that's the area that I pay attention to that could provide some kind of the support. Alright, so this is the end of the video. Hope you enjoyed it and get something useful out from the video. If you like the video, just click like and also hover to my name or picture to follow me. And do remember to subscribe to my channel so that you get instant notification of my future video ideas. And as usual, if you have any kind of the comments, suggestions, questions, or trade ideas you'd like to share with me, feel free to comment it below. I will reply to you. Thanks for watching. I will talk to you soon. Bye bye.